What is going on, guys? Welcome back to another brand new YouTube video. Today we're going to talk about the institutional trading, but before we do, just want to put this disclaimer out there. I'm not a financial nor an investment advisor. Please, the things that you see on this YouTube channel are not an indication for you to go ahead and invest your money. Online trading world carries a very huge risk. Please make sure you do your own research before you jump into this world. Now, having said that, what is institutional trading? This is basically a small fraction. It is a small little ass fraction of the reality we are all aware of. Okay, and we like to call it the institutional trading. So we have this idea of the big institutions like the hedge funds, the central banks, the commercial banks, the investment firms, all these people and all these big institutions. We have the idea that this is how they trade forex. So if you want to learn more about that, I have a playlist and I have a couple of videos in that playlist called, the playlist is called Institutional Trading. You can go ahead and watch all those videos. You can come back to this video and everything will make sense. You guys will understand much better, especially if you're new to this channel, you're new to the idea of institutional trading. Please go ahead and watch those videos and come back to this video later on. Anyways, before we talk about institutional trading, if you guys are wondering, do I do this for free? Absolutely not. I have a VIP Telegram channel, which will cost you about $50,000 only a month. And I do offer mentorships and courses. If you want to talk about that, and how much that costs, well, come talk to me when you got 9 figures in your bank account. Anyways, let's get into the video. So yesterday, I shared this trade idea. Before I do go further into the analysis and show you guys the whole trade and results, let me show you guys this first. So as you can see, yesterday was the 30th of September. Today is the 1st of October. There you go, confirmed. I'm not a scammer. Anyways, I sent this to my Telegram, which is $50,000 a month. And it will be in the description and the first comment below, so you can go ahead and join that. Give me all your money. Anyways, so 5-minute time frame on Euro USD. I saw this, and this is where I indicated my followers and all the traders in that group to enter. Now, why did I do that? First of all, don't care about the past. We have this uptrend, yes. We have this impulsive move to the upside, yes. Okay. Don't care about that. You guys care too much about the past. Anyways, so I didn't look at the 1 hour time frame for this trade. I just analyzed it on the 5-minute time frame, and that's it. So what are all these drawings or signs that you see over here? This is basically, let me go ahead and delete this and I'll show you guys what it is. So I am basically looking at the market as consolidation, right? The market is consolidating, it's moving, it's ranging within these two parallel lines or horizontal lines. They're not breaking out, they're not breaking down. Okay? So I'm sorry, they're not breaking up, they're not breaking down. Just moving within a phase, within a range. This is consolidation. So either two things can happen from here. Either the market can reverse to the downside or it can continue to the upside. Now, looking at this uptrend right here, I'm assuming that the market is going to go down. Okay, now we see this impulsive move, we see consolidation. This is what happens even on the bigger time frames. When the market is in an uptrend, it will come down, it will start slowing down, it gets exhausted. When it gets exhausted, you will see equal highs. After the equal highs, you will see this move, which is the ex-girlfriend. I like to call it the ex-girlfriend. People like to call it the institutional candle, the fake stop hunt, or whatever you want to call it. It has all these names, but basically means the same thing. You see this move, which is basically going for your stop losses. So people are selling over here. Retail traders who trade support and resistance, they see these equal highs. They're like, okay, you know what? Now the market cannot continue higher. It's exhausted. It's going to go lower. Well, that's not what happens. So we see this is basically called liquidity. Liquidity is money in the form of orders. So over here we have stop losses above these equal highs. We have stop limits, buy stops, whatever you want to call them. And let me just put this cross over here. So this liquidity was grabbed. And then we saw another set of equal highs. Now this is where the Wyckoff theory comes in, because I like to call this the 1, 2, 3 move. So we have 1, 2, 3. Third move in the Wyckoff schematic is usually the spring. Okay, so if you guys do not know what Wyckoff is, I have a video on it called Wyckoff, the birth of institutional trading. You can go watch that video. So I like to mix those up. Institutional trading, we have equal lows, equal highs. Market breaks up to the upside first, grabs all these, goes for your stop losses, hits all the stop losses, and then reverses. Now, why do I trust this as the ex-girlfriend? Well, I like to follow 3 rules. 1, the ex-girlfriend should be at the top of an uptrend. Second, it should we should see an impulsive move right after the ex-girlfriend. And third, a break in market structure. Simple as that. Follow these 3 simple rules, and I promise you, I do not promise you, I don't want to promise you, but because I don't know what kind of a trader you are, what kind of patience you have, but if you keep following these 3 rules, you will start winning more and losing less. So right after that ex-girlfriend move, we see that impulsive, that very fast, very fast move to the downside. Not only that, we broke the market structure. Market structure in this case is the support. So market structure is basically support and resistance, okay? So we break the most recent market structure, the most visible, the most obvious, and then we continue lower. So right after I saw these 3 things, I knew this was a very good trade. And as you guys can see, this is where the whole move started. So this is going to be my take profit, okay? And there's a wick over here, which means liquidity. There's going to be stop losses under here because people think this is a support. So obviously, next liquidity point is going to be my take profit. So fast forward into the time, and right here we have our entry triggered. So this was a 1 to 9 risk to reward. The stop loss was only 4.4 pips and the take profit was about 40 pips. Now I had more take profits, which I would like to show you guys in this picture, but that is in the case where you have a very picture perfect trade that goes your way entirely. So that didn't happen, unfortunately, but we made 40 pips over here. And I said in my trade yesterday, I said that I have an Easter egg in my video. I have a surprise, and what that actually is, if you go to my Instagram, which will also be in the first comment below, instagram.com/everything.presidential, everything.presidential. If you guys scroll down a little bit, you guys will see this trade right here, GBP USD, 5-minute time frame. What do you guys see over here? I want you guys to take a very good look at all of this. Let me zoom in a little bit to show you guys better. What do you guys see over here and over here? We have uptrend, equal highs, liquidity grab, break of the whole entire previous market structure, and then just like here, we have uptrend, equal highs, market grab. It's not exactly like this, but that's the whole point. It's not going to be exactly the same thing. The concept, the idea is the same. Okay, the ideology, the concept never changes. So we have uptrend, equal highs, market exhausted, break of market structure, liquidity grab, comes back into, now over here we had 0 drawdown, but over here we had about 0.1, I think. No, actually 1 pip drawdown. Drawdown means how much, for how long we were in a loss. And I can't actually, wait, let me show you guys like this. So this is my entry and about 1 pip. Jesus. Yeah, so 1 pip, as you guys can see. So really good trade. And just when I sent this trade into the group, one of our members sent this trade in the group on USD/JPY. I think his name is Omar. Please, if I'm wrong, I apologize, but he saw the same thing. He saw equal highs. Market is in an uptrend. He saw equal highs, and then he saw this move, and then boom, he saw the break of the most recent market structure. He set this as an entry, and well, this is the ex-girlfriend. Market comes back into that area, and it gave us about 27. So it was a nice 1-2 risk to reward. You could have targeted this liquidity zone or this one. Either way, it was a nice trade, and I think a couple of the people took this trade as well. I didn't. I only stuck to Euro USD. Now, before I was going to record this video, something very beautiful happened, and I want to show you guys that. So right here, if I zoom in, if I show it to you guys like this, same thing all over again. We have an uptrend, equal highs, liquidity grab, break of market structure. So just now, what is the time right now? It's actually, I think 11:05, right? Let me show you guys the time. 5 past 11 in the morning. So take a look at this picture and see what time was it when I took this picture. Can we see the time? 10:26. So half an hour before, half an hour earlier. Now, when I was just about to record the video, I saw the same schematic on GBP USD. Okay. Same market is an uptrend. We see equal highs. We see this fake ex-girlfriend. Now, it didn't break this. Yes, it did break this market structure right here. But why do I not trust this as an ex-girlfriend? Why? Well, my third rule. I want to see an impulsive move. Did we see an impulsive move? No. If anything, we saw a market slowing down, start creating higher lows and higher highs. This indicates to me that the market is going higher. Now, I went to the 1 hour time frame and I saw something that told me what was going on. So we see these equal highs. We saw this fake ex-girlfriend market come up. We saw now here. So I knew that the market was going to continue higher. Why? Because of the double top, these equal highs that I just showed you guys. So what happened? Why was I looking at this? And initially, this was only a 30 pip trade, only 30 pip. But when I say only, it is actually 1 to 6 risk to reward, which is still a very insane trade when you talk about risk management. Well, about 5 pip stop loss, 30 pip take profit. My second take profit, about 77 pips. Still working on that, but same ideology, guys. Same thing. We see equal highs, market in an uptrend, equal highs. We see the ex-girlfriend. This one is a fake one. Remember, guys, we don't see the impulsive move. Yes, there is the break of market structure. Don't get fooled. Just because it broke this support, we still have a major support. But after this ex-girlfriend, what do we see? We saw this, and then boom, market just dropped. This impulsive, very fast move broke this market structure, this market structure. This told me, indicated to me that this was a very possible, very good potential setup. That's what happened. Boom, I took the trade. You guys can see over here. If you guys think I'm a fake trader or a scammer, the result, before and after result is in front of you guys. I'll let you be the judge of that. Anyways, quickest 30 pips I've made in my life. 5, 10, 15, 20 minutes. Take profit smashed. I don't know what more to tell you guys. It is as simple as that. You just have to be patient. You just have to trust the process. Like over here, same thing. We saw a fake ex-girlfriend right here. Fake ex-girlfriend. Okay. And we didn't see that impulsive. We did see, but look at this. The price action is indicating something else. We have very, very close equal lows. Market is starting to create equal higher lows, higher highs. Price action indicates that the market is going to continue higher. That's exactly what happened. Market continued higher and did this schematic. This is the distribution schematic, Wyckoff, by the way. So I don't know what to tell you guys. It's as easy as that. Some days I trade zero trades, sometimes weeks. There are no perfect setups all the time. And of course, even when you're trading like this, you're going to lose. It doesn't matter because your stop losses are very small. One trade, if you can win one trade like this, you can lose. For example, if let's say my trades are all 5 pips stop loss. If I trade this and I win, now I have 30 pips to lose before I can come back to break even. So that means I can lose 6 trades in a row and I would still be at break even. That is why risk management and institutional trading is the best, because it lets you get the smallest of stop losses and very good take profits. So that is why this helps with the risk management. So that's it, guys. That's, again, it's happened again and again in the past. It keeps happening in the future. I don't know what to tell you guys. It's all over the place. If you guys just look, if you guys just focus on the market, backtest, like I always say, no matter what strategy you trade, backtesting is always going to help you the most. So please, guys, you can watch this video again and again. You can watch the other institutional videos on my channel again and again. You will learn something new every single time. Trust me on that. And yeah, that's it. I hope you guys learned something from this video. 50,000 subscribers. We're close to 50,000 subscribers. How insane is that? I started making YouTube videos 1 year ago because I thought I was good at trading, so why not share with the rest of the world? And guess what? It just took off. Anyways, guys, I appreciate you guys' support. I'll see you guys in the next video. Peace.